The key, I think, one of the key reasons for that is that in Hong Kong, for instance, the pension market is not that developed. So the amount of assets that are actually in local pension funds are relatively small. So the institutions that would want to invest in domestic equities just are still growing and growing slowly. So the setup of sovereign wealth funds is relatively new. So Temasek in Singapore is, compared to the Western world equivalents, is relatively new. So it is evolving and it is improving, but it is still early days. And one of the key things that's going to change that is going to be China. And so we are just starting to see the amount of capital onshore China that's starting to move offshore, looking for diversification. However, the traditional channels for investing that money don't yet exist. At the moment, it's still done relatively informally. If a Chinese entrepreneur who's made a lot of money, he'll go to someone who he trusts, who he knows. So it'll be probably a Chinese banker based in Hong Kong he met doing an IPO sometime, who's starting up a fund, and he'll invest with him. But he won't go through a sort of professional allocator or that sort of route like you would in the West. So it's a feature of history. I mean, Japan is different. Japan has a big domestic market. Korea is a bit better, but certainly places like Hong Kong, Singapore, Southeast Asia, it's an immaturity of the markets.